Can we start, Ramanujan, or we have to wait for one more minute?
Yeah, I think we can start now.
Am I audible?
Yes, you are audible, sir.
All the participants. So I would like to welcome you to the second session of Customs and Trade Compliance India Group in association with Shreyas Global. And today our topic will be EXIM incentives and state incentives. So I'd like to introduce you to our speakers today. First one is respected T.R. Srinivasan sir and C.A. Ramanujan Sharma. So before starting, I would like to give a very brief intro about our speakers. So first of all, T.R. Srinivasan sir, I would like to give introduction. So he is a fellow member of Institute of Chartered Accountants of India for past 15 plus years, and he heads a consultancy firm known as Shreyas Global. That is association having business in all the uh, sectors of customs and trade. Also, he's a partner at NV Balaji and CO. CAs focusing on matters related to risk advisory, goods and service tax, customs and FTA policies. And the key association that is TRC Nivasan sir has, he is a trainer for official department of GST, income tax, customs enforcement directorates, commercial taxes, Department of Tamil Nadu, Andhra and CAG. He is also an advisor to export promotion councils and chambers of commerce, including CAPE, Excel, EEPC, TANSIA, TMCITA, government bodies such as TIIC, Title Park, etc. Also, one good thing that he represented the audit commissionerate of custom before the CBIC and customs in respect of import policies. Also, he is actively involved in the field of education with Shreyash Vidyalaya to practically equip and upskill deserving students through a practical based curriculum and build a strong and value based finance professionals. Also, a good thing about him at that he's a all India rank holder at ICAI and gold medalist in BCom at RKM Vivekananda College. So we all welcome you, sir, to the session and thank you for coming and delivering the session. And coming to our second speaker, Mr. C.A. Ramanujan, sir. So he is an CA in practice, and also he is an policy advisory and government engagement in Haryana. He has a membership in drafting Haryana GCC Global Capability Center policy in 2025 to 30 for Haryana state government. Also, he has delivered 42 plus ICAI counseling session across Haryana. So a great thing about him that he is a state incentive is specialist, and he also has a YouTube channel, and he posts all the information about state incentives. So we welcome you, C.A. Ramanujan, sir, to the session. So after this, we would like to start our session with T.R. Srinivasan, sir. Thank you all.
Yes, sir, I think you are on mute. Hello. TR, sir, your voice is not audible actually.
Participants, please hang on for a minute. I think sir might have some problem, so we'll wait for 10 seconds to say.
Am I audible now?
Yes, sir, now audible.
Yes.
Yeah. Thank you, Atul. Thank you, Saurabh ji, for the introduction. Apologies for a slight, disturbance in the technology. Thank you, the Trade Compliance Group, for this opportunity. The topic is more, related to the benefits. And as my experience, based on my experience, I've just shared whatever we have learned more on one of the key things with respect to what the business owners, promoters, compliance groups in the various organizations look at is how do they optimize their benefits. In my experience, most of the business owners and companies, their pet department. You all know that in every organization, the most important or pet department is their marketing and sales, who focuses on bringing revenues, sales, building more products, services, building revenue. Okay. However, that is only to increase the sales line, top line. It increases the sales revenue, etc. But then what happens is top line alone is not important. We are looking at how do we make the bottom line profits. But for profits, every company, even if you are part of the finance team or part of the compliance team or part of the trade, import export team, logistics, there are 4 C's I always say that we have to look for. One is our actions should lead to more cash flows. The cash flows could be by way of government subsidies. It should be by way of, if it's a finance department, getting receivables, etc. Tax savings, benefits, savings in cost. The second C is be on top of compliance. Ensure that you are in line with the laws, HSN classification disputes. Ensure that all are correctly handled. Third is conflicts. You may have some notices, assessments going on. Ensure that it is tackled effectively. This is the effectiveness of the subject matter experts in. It could be in compliance, taxation, or it could be in any logistics. And fourth is clarity. Bring more clarity on what level of profitability they have. Are they making profits, loss? Is there any better way of working, etc.? So these 4 C's, if any business organization, they have a right team in these 4 C's, then top line will increase, but then their profitability will also substantially increase. So normally I say along with these 4 C's, there are 3 E's every business owner should always look for. 3 positive factors, 3 E's. First E is talking about expansion. There are 3 positive things which happens in any business. There have been so many things, but the top 3 I say is one is expansion, new setup, further expansion, etc. What benefits government gives? Always we need to start asking for what benefits does the government give for these 3 E's. First E is expansion. Second E is talking about employments, where I generate more employment. Does the government give me any subsidy or does the government give any opportunities to save? And third thing is exports. So if I do exports, is there any benefit? So always for the government, these 3 E's are top priority. And for the businesses, these 4 C's have to be very strong. And most business owners focus on marketing and sales, but then these 4 C's are very important. So whenever in any department we are present, our objective should be to increase the cash flow, handle the compliances effectively, resolve the conflicts. So naturally, clarity will be there. So towards this, I would like to highlight some of the not so popular. Some of them could be known to all, and some of them could be not so popular ones. But some things which are a combination of GST, customs, to income tax together. Some things could be, because of emanating out of some recent precedents. Probably you can see how that is useful to our scenarios, I would say these are all important opportunities to save costs. Okay, so one of the most important E which we talked about was exports. We told exports is a positive E. In fact, everybody knows that if it is exports, then you have eligibility for refunds, which is popularly known. You get refund for GST, you get refund for customs duty, etc., which is popular. But then in GST, you will find that there are certain credits which we cannot take. There are some credits which we cannot take in GST. This I'm talking about GST, but it's relevant for compliance and exports only. So because this is normally in every company, big organizations, you will have a separate department handling the GST vertical and separate department handling the customs and logistics vertical. So this is important for us to understand either as a consultant or as part of the company. A together approach, a holistic approach becomes important. One important thing in this is, which is not many companies are aware and which many companies miss out, is that they do construction. Companies do construction, companies do, involve in canteen expenses, transportation, etc. When they do expansion or construction, there are a lot of GST they pay on their construction. Normally, they treat this as a ineligible. That is, you can't take credit for these kind of GST. But there is a provision in the GST law, which many people are not actually looking into very carefully, is that GST law permits refund of ineligible credits also. That is, you are eligible for refund of regular credits, everybody knows. But then ineligible credit also is eligible for refund, because as per GST law, section 54 says you are eligible for refund of GST paid on inputs and input services. It does not talk about eligible inputs, eligible services. It talks about only inputs and input services. So even if it is ineligible, the credits or the GST paid on those ineligible credits can also be liquidated. So recently, if your company or any of your known circle has gone for expansion, and if they have paid any GST on construction, etc., you can look. And if they are into exports, if your company is into exports, then you can claim refund of those ineligible credit also. Of course, this has to be filed as a refund with the GST authorities. But being related to the exports, this also becomes eligible for. There is one possibility is that actually to offset this ineligible credit, the government has something called RODTEP. RoDTEP scheme is there. This RoDTEP scheme basically offsets various ineligible credits which is not claimable, and other than that, so many other expenses also getting reimbursed. But what happens is the RoDTEP sometimes doesn't sufficiently cover the total expenses which a business owner incurs. So, and there's no overlapping provision in GST law which says if you go for RoDTEP, you cannot go for this credit also. So both ways they are independent. So if somebody is doing expansion and they are into exports, you can claim the GST which you paid on ineligible items like capital, etc., as a refund from the respective GST authorities. This has been held as valid by the Madras High Court in the pre-GST era, based on the principle that taxes cannot be exported, and hence based on the foreign trade policy also, this becomes eligible for. So you may look for this option. This is number one. Second is, you will find that in many cases where there were defaults in the old regime, okay, there have been defaults in the old regime in fulfilling the compliances of EPCG or advanced licenses, etc. So, and they would have repaid the customs duty along with CVD, SAD. In the old regime, we had an amnesty scheme from the Foreign Trade Policy Authority, DGFT, very recently. And if many people have not fulfilled those obligations, they have paid a duty either under amnesty scheme or after issuing a notice. Now, in this regard, I would like to point out an important judgment of the Supreme Court, which many trade may be aware of, but then some people have not factored this judgment as part of their calculations. So the Supreme Court has held that there is no provision for levying interest on CVD and SAD under the Customs Tariff Act, and hence interest is not payable for CVD and SAD if it is paid belatedly. That means if somebody is paying today the countervailing duty or additional customs duty, I would use the word additional customs duty under 3.1 or 3.5 SAD also, the interest meter does not run on those amounts because the levy itself is not been held. It's unconstitutional. It has been held by the Supreme Court. Because the levy is held unconstitutional, if somebody has paid interest on the CVD or SAD, you can seek for refund from the customs authorities. And more importantly, in case if time limit is over, because normally we know refund go based on 1 year time limit, there is always a possibility of claiming this refund because this is not even coming within the constitutional limit. It is unconstitutional and then permanently, ideally speaking, even more than 1 year, you can seek for refund of the interest. So this is a very important judgment. Of course, it has come quite some back, but many people continue to pay interest for the old defaults. There have been now questions raised whether on IGST interest is payable or not. Now, post GST, we don't have CVD or SAD. On imports, we pay IGST. So whether for IGST interest is payable or not, the matter is now going through a matter of disputes. The principles which are held in the Supreme Court is also argued on the same matter. In fact, recently there's a tribunal which has upheld that IGST interest is payable. They said it is also under the GST Act, so interest is payable is the conclusion decided by the recent tribunal judgment. However, this matter is still not concluded and it is ongoing. So if somebody has paid IGST interest also, we suggest the interest to be paid under protest so that at least future, if any favorable judgment comes on the IGST issue, you may seek for a refund of this matter. So this is the second point which would like to address upon. The third thing is, recently what has happened is whenever you go for imports, if you do imports and if the imports is being done for the purpose of exports, then as you know, in DGFT, there's a policy called advance license. So as per that advance license, you can import the raw materials without paying any customs duty. So this is permissible under the DGFT. That's called advance license. And whenever we import raw material without paying the customs duty and GST, in GST, there was a provision which said when you export it, you cannot pay GST and claim refund. That is, when you do export, you have two options. One, you don't pay any GST, or you pay GST and claim refund. One is LUT route, another one is payment and refund route. There are a lot of issues. There's many cases where importers availed advance license benefit and they did not pay any GST on customs duty on import, whereas on export they had paid IGST and claimed refund. A lot of customs formation had issued a lot of notices asking the dealers or the importers, exporters to pay along with interest. So in this regard, after going through a lot of policy representations, the GST has removed that particular rule. So which means as on today, you can import without paying customs duty and GST under advance license. And this is also applicable for EOU. Okay, both EOU, advance license, it is applicable. And you can export on payment. So this way your credit can be liquidated faster. Okay. Now the particular rule has been deleted. This rule is called 9610. This rule is deleted. Because the rule is deleted, there was a question whether if it is deleted, does it not exist at all from day one? So that old cases also we can avoid, because many people pay and then take credit. So much of issues are going on in this area. So in this context, the question was, because it is deleted, does it not even exist from day one? So in this regard, there are judgments from the Bombay High Court and the other high courts where they had made a finding that because it is deleted, the particular rule itself does not exist from day one, and hence no need to comply with that rule, or rather no need to pay interest today. You can just leave it as it is. So that means if somebody is going through this problem where you have availed advance license and also paid IGST on export, you can try to see if that can be contested without paying for interest. So this is the third point which is ongoing. So this is an important judgment from Bombay High Court which you can see. So the last one, this is only just a beginning. As you know, the objective of exports of the government is to encourage more exports to we receive foreign currency. That's the objective. Okay. Now, to encourage that, the government is having various support schemes through which they encourage these foreign benefits. And of course, earlier we used to have various licenses and government gives those licenses. Now, the government has broadly rationalized or rather changed all these licenses. So in that, one of the point is that objective is the entire cycle, the entire supply chain, no duty has to be paid. That's all. That's the objective. Or even if duty is paid, you are getting it as a refund. So towards that, what government has done is the government has devised various schemes to ensure that these benefits are available. Some of them could be known to all, and some of them people have to work and identify. So whenever I am a importer and a exporter, okay, first thing is we should be clear about some of the websites. I'm sure if you are new to this area or still exploring this area, our suggestion is you need to be consistently in touch with some of the important websites. And in that, the most important, which is prepared, which is also built by the government along with the various trade organization, is the India Trade Portal. Okay, the India Trade Portal is one of the very resourceful websites where you will find information about various schemes, and also you'll also find information about the benefits of these schemes, and also cross country in other country, what is the impact. All those things can be seen. So please always watch out for the India Trade Portal website, which also gives you various benefits and schemes. Now, towards that, the first basic scheme which everybody should be aware is whenever we do the export, the government gives us a percentage of that export value as a license, and that license is called as RODTEP license, which is given as a percentage only if it is declared in the shipping bill. And many cases, without knowing it, people put no, but then you have to mention yes while mentioning the shipping bill. There are few judgments where they told even if you put no, you can get it, but then it's a matter of dispute. So when you file the shipping bill, you have to ensure that the column is mentioned as yes for claiming this license. And this license is a percentage of the FOB value of the product, and it ranges between 0.5 percentage to even up to 1.52 percentage of the FOB value of exports. Now, please note that this license will not automatically come and hit our bank account. It does not even hit our any of the benefits. It has to be manually selected at the time of shipping bill. And once it is selected in our IceGate login portal, I'm sure everybody will have an IceGate login. So in that you have a option to generate the script. There's a RODTEP ledger, and you have to go to the ledger and manually generate the script. If it is not generated, then after 3 years it will expire. So it is a manual process. It's not an automatic generation process and credit. So the RODTEP is a license which is given, and you can see the scheme's details as part of the DGFT portal, and of course India Trade Portal also. That's the first one. Now RODTEP, very recently, of course, the government has again reintroduced the benefit for EOUs, which was earlier not eligible. Then in between they stopped the benefit, and also for advanced license holders, they have made this benefit eligible. However, it is not applicable for companies who are into bonded manufacturing. We call it as mover. If some company is into bonded manufacturing, then for them this RODTEP is presently not applicable. In fact, representations have gone when EOU, SEZs, as well as you have the advanced license being eligible. Why not bonded manufacturing? So that, of course, the government is yet to consider it favorably. And just because somebody puts yes or no in the shipping bill will not decide that they have claimed it. The claiming will happen only if they have actually gone into the IceGate portal and generated that license. Till such time, it will not be considered as claimed. So this is the first basic license everybody should look for. The second thing is, whenever we do export, the fundamental principle of the government is duty should be, there should not be any customs duty in the process. Your customs duty should be saved. So what happens is, every company, if you are a manufacturer exporter or even a merchant exporter, we have to understand what is the total duty suffered in my export product, which is a fundamental evaluation. What is my BOM, bill of materials? In this bill of materials, how much is my duty? Direct duty is how much? How much is my indirect duty? Now, what do we mean by indirect duty? If I'm a manufacturer exporter, then first thing is I will be buying raw material, domestic or import. Sometimes I may buy from a tier 1 supplier or tier 2 supplier who may have imported that raw material. So it is responsibility for us to ascertain in my export product what is my import content. The import content could be direct import content or indirect import content. So if we have that import content and total duty suffered without GST, in GST you will take credit. So total customs duty, how much we have suffered, if that data is there, so we can ascertain that customs duty and seek for a refund of the entire customs duty, and that's what the government calls it as drawback. So many companies, they go for a standard drawback. There is a percentage which just like RODTEP, the government gives standard drawback percentage. But then we need to understand that there is something called as, you'll find here in number 4, there's a standard drawback, which the government standard matter gives. Sometimes the standard drawback could be more than what duty we have suffered. Then that is fine. But many cases, we find that the manufacturers or even merchant exporters do not ascertain how much customs duty they have suffered in their whole manufacturing process, either on their own or through their suppliers. If somebody in your supply chain or yourself has suffered duty, and that duty amount is higher than the drawback government is giving, then you have to make a mention in your shipping bill that you are opting for special drawback, and the mention is given by way of a code called 9807. So this is a compulsory, it's not it's a requirement to claim the drawback. So you have to mention the code, and with that you can ascertain your drawback and claim it. And please remember, it is to be claimed within a time limit, which is 3 months, within which we have to claim it, and extendable up to 1 year. If somebody is claiming it more than 1 year, then they have to go to the board, CBIC, and make an application. In exceptional cases, they may also allow the drawback. So the idea is you need to ascertain the total duty in your value chain and ascertain that, seek for a special drawback from the authorities. Now, sometimes what happens, the suppliers may not be willing to share us the data on the duty they are suffering, maybe because of pricing reasons or other reasons. So in such cases, when the suppliers are not able to share the data, the alternate way of saving this duty is by you may go for an advanced license. The other option is to go for an advanced license where we procure itself duty free. Okay. Now for import, advanced license is okay. Can I use even for domestic purchase advanced license? The answer is yes. You can even buy domestic purchase with advanced license. So what is the use? Because anyway, domestic, if I buy, there is no customs duty. It's only GST. What is the advantage? Now, please note that when advanced license is used for domestic purchases, the supplier who is giving against that advanced license, he is also treated as an exporter as per Chapter 7 of the Foreign Trade Policy. Because he is treated as an exporter, is deemed as an exporter as per Chapter 7 of the Foreign Trade Policy, whatever procurements he does for this sales, for this advanced license sales, whatever he procures, he can procure it customs duty free. So that means if some supplier is not willing to share his data with us, and hence we are not able to go for special drawback, you can ask him to go for advanced license, or rather you can go for an advanced license and endorse it in his name, so he can supply the raw material against that, but he can supply his material against that advanced license, and he can save customs duty on his import content. So the one option you have to always keep in mind fundamentally, that my exports have to be duty free. If it has to be duty free, then one is go for a special drawback. Now, if you go for a special drawback, advantages, RODTEP can be fully claimed. There is no restriction on it because it's not coming under any restriction limit. If you go for advanced license, then RODTEP also becomes reduced. Like instead of 1%, you may get only 0.8% or 0.5%. So there's a reduction in advanced license. So you have to, as a exporter or importer, you have to work out what is the most efficient option for you, both operationally in terms of margins also, what looks better. So advanced license, it can be used not only for direct imports, you can also use it for domestic procurements against which you can secure it. Another instance where you can use advanced license is, let's say your product is subject to export duty. If your product is subject to export duty, let's say some of the rice had export duty. So in which case, you are not eligible to go for GST refund. There's a specific provision in the GST law which says you can't go for GST refund if your product is subject to export duty. Then there'll be huge accumulation of credits because of that. So what you can do in that case is that you may go for an advanced license for procurement of materials, raw materials, or even the packing materials, etc. You can procure against advanced license, because once you procure against advanced license, it is treated as deemed exports. The moment it is deemed exports, the supplier can go for refund of GST also. So it's not only customs duty refund, GST refund also becomes eligible, and that is not banned under GST law. So if somebody is having huge credit accumulation and he is suffering of export duty, he may also explore domestic advanced license in that regard. So both deemed export benefit you will get, you can also go for a benefit for GST refund. So this is in case of advanced licenses and domestic scenario. Sometimes what could happen is, like I am importing capital goods. Of course, many people may know that capital goods have the benefit of EPCG, provided you do have a clear visibility on exports. And we have to note that it can be direct exports or third-party exports. Both are covered for the calculation of the capital goods scheme. There's a scheme for if I'm seeing visibility for exports, and if I'm going to import machinery, then I can import the machinery under EPCG, provided I have visibility for exports. But here, one important thing to look for is, it is not only for my exports I can go. If my customer has exports, against that exports also I can import under EPCG license and endorse his exports for the same. The same thing applies for my supplier also. Let's say my supplier has gone for expansion and I am into exports. Then if there is a mutual understanding and agreement between these two parties, he can also import capital goods under EPCG license, and my exports can be endorsed against his EPCG license. So that also becomes duty free. So idea again is fundamentally you have to keep in mind cash flows, how to save my cash flow or how to generate more cash flow whenever we see a export related scenarios. So that is an important point to look for. If you are an MSME, in between MSME was given relief by various including agencies, including RBI. And please note that the MSME limit has been changed. As every company was growing, small companies, and they're growing to large, the government made them to continue in MSME by changing the definition. So what they said now, if your turnover is up to 500 crores in a year and investment in machinery is 125 crores, you are still MSME. You are still a medium size company. You are not considered as big company. You are still a medium. So imagine up to 500 crores, the company is considered as medium size only. If you are MSME, then the government gives the scheme called interest equalization scheme that has now been concluded till December. It may again reopen after some time. So where for these MSMEs, their interest paid is also reimbursed up to a particular percent. Is reimbursed by the DGFT through this interest equalization scheme if you are an MSME unit. So whatever interest paid on loans becomes reimbursable. OD or CC or PCFCs becomes reimbursable if you are MSME and you are doing exports also. So these are all points which we can keep in mind when we do the imports for the purpose of export. And as I told, ineligible credit also we can look for refund. And next point is whenever we set up, in fact, somebody is exploring export market. They are still not tested it. They are still in the initial stage of exploring export market, and you want to participate in exports as a stall, etc. Then you also have to look for a scheme which is called Market Access Initiative Scheme, where the objective is to explore future markets. I mean, the upcoming markets, and if there are exports happening, then you can tie up with the Export Promotion Council and seek for reimbursement of the cost associated with such export. Could be transport, could be the logistics, could be stall related cost. So please explore this scheme whenever you are trying to go for a government is also trying to support to that extent, where you can be considered as a preferable man. You'll be compensated for, at least not fully, it is a substantial amount can be compensated by DGFT for the Market Access Initiative Scheme. So whenever you're going for a new expo, etc., please check with your Export Promotion Council about going for it, because I always say that more than anything, having information about something and applying it is important. So applied knowledge is always wealth. So you keep exploring with the Export Promotion Council about the compensation for setting up new stalls, setting up new locations, markets. You can explore that scheme available. Of course, many of the importers, all these what we talk about is exports related benefits. And as part of that, of course, the government also gives for importers, at least the objective of the government is to minimize the time taken. Though, of course, India consistently brings in measures to bring an international trusted network. The government has brought something called AEO, okay, Authorized Economic Operator. So AEO is a certification given by the government for the various importers, and which enables them at least a faster clearance process on clearance. That means there are some benefits which includes, of course, not moving it through the CFS, but move it directly from the port to their factory. So that benefit is also given subject to availability. If it's a container movement, then that movement is also possible for. But then there is a understanding that if there is a show cause notice, then AEO is not eligible, which is not true. Only if show cause notice is because of any smuggling activities or any clandestine removals are there, where you have goods are moved without even paying, without even declaring, etc. Under declaration or no declaration, then the idea is you can go for you can other than that you can still go for AEO. That means AEO would be eligible even if you have show cause notice coming for any differential tax or differential duty. You can still go for AEO 1, 2, or 3. So it is more importantly, T1 is the lowest we can go for. At least it helps in some clearances, but it also adds more responsibilities. What responsibility? Because customs is going to trust and they're going to say, okay, is the AEO guy, so we'll clear it faster. If it happens and we are not in any monitored categories, then our responsibility to declare HSN code correctly becomes more important, because if the HSN code is misclassified there, the customs can always say that you are a AEO person, you should have been more careful in classifying yourself. So this is a very important point. When you go for AEO, you have to also ensure that your declarations and in the customs documents are more correct. In fact, we find in many cases that the HSN codes or declarations are done very casually, and it keeps moving on forever, and suddenly one time the customs department identifies, it unnecessarily opens up last 5 years. In fact, it's one of the cases why suppression can be invoked very comfortably if you are a AEO. So we need to be very careful when you go for AEO that your documents are perfect. So it can be T1, T2, or 3. If it is T2, then as eligible, you are eligible for 15 days of block payment. There's every 15th we can make the payment. There's no need to make the payment every day. So that is one advantage with respect to being a T2, but it comes with the responsibility of having the correct customs documents and declarations as regards the customs day-to-day documents are concerned. So this is a very important certification. Ideally speaking, this is cross-country. That means if our entire network is AEO, the entire movement has to be seamless. In fact, customs should never be interfering across because it's a global certification, and that's the agenda of going through this scheme. This is about AEO. Ideally, when somebody is deciding about export facility, consistently we now India is also looked at as a export and import and export hub, where now many companies are looking at India to imports, process, assemble, etc., and then exports. So in this context, there are various decisions to be taken. So when a company is formed with an import and export decision, or if we have got an opportunity where there's an import and an export process is going to be there, then what options available with them? Either they go for a EOU scheme, which is still in existence. There was a discussion that they'll discontinue it. However, it is continuing to be there, which in fact, who are purely export oriented can go for it. And EOU doesn't mean that we have to be 100% exports. We can still do about 2/3 domestic, exports and 1/3 domestic sales. So EOU is a scheme where you do imports, process, manufacture, and it is no restriction on any location, anywhere you can set up. Then you do the export. The decision factor, if you are going for an EOU, the main decision factor is, of course, advantage being it's a one-time process of approval. It's not every time. You can set up anywhere. But if it is multiple locations, it can become a challenge because then you have to keep moving the goods from one to another. It could be a challenge. If it's a continuous factory where processing will go from one factory to another, then EOU, or even for that matter, bonded warehouse called mover license can become a challenge. If the end-to-end process happens in a particular location, then EOU may still suit, provided you do 2/3 of the total turnover as exports. Now, more importantly, if you are EOU, please note that you can procure all your procurements without GST or on payment of GST. And then you can claim refund of it, which is normal. EOU is just like any other export entities to that extent. However, an interesting point is there's a circular from the GST department in 2022. What it says is even ineligible items you can procure and claim refund of those GST, which I told on the first slide that you can claim GST refund for ineligible items. That anyway is eligible for all export companies. It could be normal or EOU, doesn't matter. But then for EOU, one special point is that you can even procure, let's say you are buying a car, motor car you are buying. Motor car is normally not eligible for GST credit, okay, because it is specifically disallowed. But for an EOU, the supply becomes a deemed export criteria. It could be car or it could be any other items. Any supply, could be construction materials. They're all treated as deemed exports. Because for EOU or STPI, this becomes a deemed exports. The particular supply becomes eligible for drawback also. Under DGFT, this becomes eligible for drawback. Just like you have drawback for direct exports, the same percentage applies. All industry rate drawback can be applied for supplies to EOU also. Second is they also becomes refundable. That is provided you follow the circular of 2017. There's a circular in 2017 for EOUs. Then even if it is ineligible items, you can go for refund of those GST amounts. Even it is as a circular in 2022 by GST department permitting it. So this is one advantage you have to explore. Have you explored? Have you claimed this? If you are an EOU or you are going to plan an EOU, these are positives. The negatives, of course, you cannot do more than 1/3 domestic sales. Anyway, government is now planned an amendment to the SEZ Act where effectively SEZ EOU largely, except for a few cosmetic things, could become same. So, so the context EOU can be kept in the context of exports and procurements domestically. There are good advantages of going for deemed exports drawback. The deemed export drawback is something which many people have not fully explored it. And that is something which you may look for. Whether you are a supplier to a EOU or a supplier to SEZ, you can explore for a deemed export drawback. The second is, now many popular concept is if you are more of an assembly unit, very less complex in terms of processing, etc., then we may go for a bonded manufacturing facility, or we call it as a bonded mover license. We can go for it. But again, if the process it becomes very complicated, then the documentation becomes very complicated. So we need to be very clear on operationally whether we are having strong systems in place. If that be the case, one advantage is EOU, you can't do more than 1/3 domestically. Bonded manufacturing, you can do everything domestically also, no problem. But no duty at the time of imports. For example, one of this case, they imported, in fact, in between, they imported machinery. The machinery is going to be in a particular identified location. But then the machinery will be used purely for domestic sale. Can they use mover license and import it? The answer is yes, they can. So there is no restriction that it has to be for export only. It can be for domestic, absolutely. Can we do partly a mover license, that is full factory? Can I only cover a specific identified area? The answer is still yes, you can. It is only what we designate as a mover license. It is possible to have a specified area also as a mover licensed unit, and you can import whatever materials to that extent and machinery without duty. Only thing, after 5 years, 10 years, when you are going to sell the machinery, if you are going to sell locally, then entire duty has to be paid without interest. There's no interest for the same, but duty has to be paid fully. There's no depreciation effect. If you're going to export, no duty is applicable. So what many companies do is they evaluate their process. If their process is simple, there are a lot of import content, but domestic focused, they may go for a mover license where it could be easy to handle and avoid working capital issues. Especially now when BIS is being mandated for many companies, and some of them are looking at increasing their supply chain capacity now to avoid stoppage or any issues as BIS becomes mandatory. They may go for a mover license to save working capital in this regard. Of course, mover is nothing but a extended bonded warehouse license only. So the same principles become applicable there also. Now, SEZ was popular. Now it's kind of getting not so popular. Of course, there are a lot of inventories. SEZ units remaining being used, mainly because that when you locally sell SEZ, you have to pay full duty. There are amendments proposed, but it is yet to be active. So when somebody is deciding to set up a import-export facility, you may evaluate between whether we have to go for these license-based options, or we can go for a simple EPCG, advanced authorization option, and the call has to be taken basis this. And when we go for advanced license, as I told, you can import without duty. One important thing we have to keep in mind is the wastages. So the wastages which is applicable for an advanced license is either prefixed based on the standard input-output norms, or we can go for a specific percentage. That's called declaration. We can go and apply online in DGFT portal and go for a self-declaration. So you can decide the wastages and apply it. One more interesting thing is in applying advanced license, if you are AEO, even if it is T1, it is fine. For an AEO operator, then you can go for a specific policy called self-ratification. Self-ratification is a case where you don't have to even go for approval from DGFT norms committee. It is self-ratification. That is, you yourself can certify it is correct and it is done. There is no external verification, because in a normal norms fixation, we have to go and apply it to Delhi, and the DGFT Delhi the norms committee has to approve that application. But however, if you are AEO, instead of going for self-declaration norms, you can go for self-ratification norms. Of course, it has to be correctly declared. So responsibility is naturally more that it has to be self-ratified, but no need for a verification. No need for verification by the DGFT authorities. So if you are a AEO and you are going for advanced license, please look for an option called self-ratification, which is also actively available. Now, of course, along with that, another option is to see when you are having the advanced license. Some people go for a duty-free import, but now popular is advanced. Wherever some consumption-based benefits are taken, people go for a duty-free import license. So normally, the export benefits, they have to first see the eligibility of the product and always look for the duty exemption opportunities or additional incentive opportunities, and either we have to go for a one-time license or we have to go for a multiple license we have to look for. And whenever you feel that SION norms, this is very important. Many companies are happy with SION norms if that is covered under standard output norms for advanced license. But sometimes the SION norms may not be favorable in the sense that the wastage could be more. In which case, we would suggest that you can go for a specific norms committee approval and seek for a revision of the norms, so that the 0.1% or rather 1%, 2% wastages in norms can make a significant impact on the whole process. So when you are doing an import, please look for an advanced license, norms, no norms, self-ratification options when you do it. And when you're doing the exports, please look for the drawback option or special drawback option. In fact, when people go for license-based exemptions like mover licenses, or you go for any specific licenses like, as I told, EOU, etc., there is one issue is there, which is mover licenses gives benefit only for imports, direct imports. Same thing for advanced license also, it is giving for direct imports. And as I told, advanced license can be for domestic procurements also. In fact, for a moment, if you are doing imports, and even in domestic procurement, you have duty paid, you can still go for special drawback refund. There's a specific application for in drawback itself. Specifically, it asks for do you have any duty paid inputs being used in your advanced authorization items? If some of your items are not covered in advanced authorization, but still you are going to locally procure them, you can cover them under those duty paid items and you can go for special drawback refund. So that option is also there. So always ensure that you have to ensure your entire supply chain becomes customs duty free, and towards that government has these options being applicable. The same thing applies for a mover license. If I am a mover, import becomes duty free, but then my domestic procurement, if my supplier has paid duty indirectly, then that will go and add up to my exports. You can still opt for a special drawback license for the purpose of this purpose, and you can even go for an advanced license for domestic purposes, even if you are a mover license, so that your domestic procurements also can come duty free, customs duty free. So this concept has to be kept in mind whenever you go for it. Now, one question is that more elaborate duty drawback. Like, okay, now probably I'm not able to share a live case now considering the time, but as you know, the drawback claim is based on our BOM, bill of materials, and in the bill of materials, the total duty suffered is captured, and it requires certification from two authorities, DBK. You have the certification from CA, and you also have the certification from chart engineer, and basis that the whole process is determined. So whenever, I think probably we can have one more separate session on how to specifically prepare, but normally the prime focus is on communication of the BOM. So if the customs authorities are clear on what is your BOM and what is the import content in the BOM, the whole process becomes easier to adopt. So whenever you become time barred, the most important thing is all these comes with the expiry date. RoadTEP is 3 years. Within 1 year, after 1 year, you will have the reduction in the percentage. You have advanced license to be completed within a period. Then you have EPCG fulfillment within 6 years. So everything comes with a time limit. And if the time limit is gone, then the eligibility, even the special drawback, deemed drawback benefit locally, which is being obtained, that also comes with the time limit. So everything is with the time limit coming. If there is an expiry happening, then one possible option you can still explore is go to the board for a condemnation. It's not a free pass. You have to justify your case of why you are going for it. But then the special drawback, I mean, whenever you missed it, you can go to the board or DGFT and seek for either a policy relaxation or you seek for a condemnation. So that option is still open wherever you have exceeded the time limit. And there are instances where the condemnation or the relaxation have been granted. Of course, it requires a strong representation to the authorities of why the benefit should be allowed. These are all the schemes which are directly impacting the import exports. Another possibility we have to ensure is we do significant exports. Government has already created the status holder, and status holder is more of a certificate. Now it is coming automated fashion from the authorities. So, are you a status holder? Is what something you can look for. If not, please apply and acquire the same. And that is one of the recognitions which a company can have. For one is to expedite their process. Second, of course, as a matter of pride. So these are all the key points which, as a import exporter, we may have to keep in mind while we go for it. And whenever now there's a new section which is being introduced, which is section 18A, which most of you may be aware, which is related to customs duty reassessments. That is, whenever we have made wrong declaration in customs duty, we can go for a amendment in the bill of entry. Earlier, they didn't allow beyond 3 months, and that too with the condition that only for apparent errors has to be there. But now the 18A looks for reassessments for any reasons, can be reassessed. But then, though the section is notified, the corresponding implementation regulations notifications are yet to come, and hence it is, though it has life, it cannot walk. So whenever you that getting implemented, you can look for that option to regularize. The time limit is not mentioned, so you can even go back to the past. So we have to see how the final board notifications or regulations are coming up. So basis that you can revise it. And whenever you go and pay any duty, this is one important point is, let's say you have imported a material with a wrong payment of duty. Okay, and you have to pay a higher duty because of a notice coming from the department. And that particular product, raw material, got manufactured and exported. So export happened, this notice has come, let's say after 3-4 years, and you are paying the duty today. But because it is exported, can you go for drawback? The answer is yes. There is no, the time limit has been revised. There's a specific policy circular from the board. It says if you are importing has happened long back, and you have also paid the duty and you got the drawback, but later the duty got revised upwards, then that amount to the proportion of exports can be claimed. From the time you are making the payment, you can make the claim within 3 months. So always ensure that anything related to exports, you get it back in one form or the other. And that thought process should be ingrained. As I told, 3 E's are key. One is expansion, then we have the employment and exports. So related to exports, it could be a tax benefit, could be a GST benefit, could be a customs benefit, could be a DGFT benefit, or it could be any other subsidies from the government, which my colleague will take through. So this should be kept in mind, and that way the cost can always be optimized. So I think I will conclude the session at this stage. So there are a few other things which I believe these are the important websites which you need to always watch out for. And in that, I would say the top 2 are more critical. The Indian Trade Portal is a very important website. You can always explore it more. It gives also SEPA benefit, cross country, which is FTA benefits at a single source. It gives the data. So the first one is myscheme.gov.in, which is not known to many. It's a single portal where all the government benefits are tracked across India, across all states, all the states and union territories and central government, whatever benefits they have, all those benefits have been mentioned in this portal called myscheme.gov.in. Export everything. So if you are in the trade, you always can go to this website. In fact, you can register and explore more options. You will find out some not so known benefits also as part of this website. So these are the 2 important websites. Others, of course, are popular, but these are the 2 important you have to look for. So I think I'll finish my session here. And any doubts or something, or should we take it now, or I think I'll hand it over to
So
my
can we
colleague
take
Raman.
the doubt at the last? We have
Yeah.
2-3 questions. Yeah.
Sure. Okay.
Thank you, sir. So now handing over to Ramanujan Sharma for his topic on state incentives. Ramanujan, you are on mute.
Hello. Now, am I audible?
Yes, audible.
First of all, thank you very much, Saurav, for such a nice introduction and for such a wonderful opportunity for everyone and creating such a useful WhatsApp group and channel for the benefit of public at large. So today our topic is like state incentive. As TR Srinivasan sir has discussed, we have 4 Cs. So our state incentive part will be part of the bring cash to the organization. Like 1C is bring cash, another one is resolve conflict, and third one is compliance and bring clarity. So this state incentive will fall into bring cash. So what exactly is like our main purpose to cover this topic is, at least while investing in any new sector, new state, new location, so we must have some basic idea about some of the factors which we should keep in mind before making any investment decision. There are lots of factors which we can consider, and state incentive is one of them. Like what are the regulatory situation, regulatory support from the state, and financial support as well. So it can be in terms of financial and non-financial. We'll discuss at later stage one by one. So if you ask me like what is state incentive? Like state incentive is the benefit or support offered by any state government to encourage so that investors can invest in that particular state. That can be in terms of new setting up of new unit or expansion of the existing unit. The basic purpose is to promote economic growth, generate employment, and improve regional development. Why state government provide these incentive? The state government provides this incentive to attract new businesses or expansion of existing businesses. There should be the incentive can help in backward areas or untapped region by attracting industries so that it can reduce regional disparities. Like the state can grow like from every corner. Obviously new industry and project will definitely going to create new job opportunities specifically for the local people, because in every state government incentive for employment generation, it will be the first criteria. Like if you are generating this much of local opportunities, then we'll give you this amount of incentive. Then definitely in long term, the revenue base will also increase for the state government. Now, like how are the state government providing these incentive? Like these incentive can be in two form. First can be fiscal incentive. In every state policy, two types of incentive will be provided by every state government. If you will see majorly, like first one will be fiscal incentive and another one will be non-fiscal incentive. Fiscal incentive main focus will be to reduce the cost, reduce the business cost, or to make it more competitive in comparison to other state. And for non-fiscal incentive, to ease the business operation. For example, in case of financial support, if you will read or if you will go through the any state policy, so you will find refund of the state GST. Either refund of state GST which has been paid in cash or the gross amount, or some of the state government are giving in terms of capital subsidy as a percentage of the total investment made. Another one can be stamp duty refund, electricity duty exemption, employment generation, and freight assistance can also be there for export. In case of non-monetary support, it can be faster approval and clearances, because if India is known for complex laws and these clearances, first you will have to apply, for example, GST, registrations, factory license, building plan, change of land use. So there are multiple layers of approvals and clearances which are required to start a business. So every state government is trying very hard to make these process easier and smoother for the business owner. So in almost every policy you will find there will be a provision for faster approval and clearances. Assistance for environmental compliances, for example, pollution control, water, NOC, and other things. Skill development program. So these initiatives are normally taken by the state government. Infrastructure sports like road connectivity, metro, and for there can be some support in the form of industrial park, SCZ, clusters, industrial model township, and various economic zones in which a special reduction can be there by the government or a special infra can be there so that the people will come and set up their unit in that particular area. Now the point is, what are the factors we should keep in mind while investing? So while checking for this state incentive, there are three factors which we should keep in mind. First is investment size. What is the importance of investment size in this case? Because based on investment size, your project will be classified into various categories depend on the state policies. It can be MSME, large, mega, ultra mega. Because in case of mega and ultra mega, in some of the states, government is providing over and above the standard package. Like the incentive can be on higher side based on the number of years. For example, for MSME, if there is a 10-year incentive for employment generation, so you can ask the government, we want for 15 years. So you can negotiate. In simple terms, you can have a memorandum of understanding with the government and you can negotiate with the government we are going to add 400 CR or 100 CR value and we want this much of value from the government also. First point is investment size. Second point is location of the project. So location of the project will also play a major role. Because if you are making investment in developed area, then definitely the amount of incentive will always be on lower side. And at the same time, if you are going to invest less amount and into backward area, so then government will always try to bring the investment in the less developed area or untapped areas. So we can plan accordingly. Where is our end customer? What is our product? What about the skilled resources? Because in less developed area, land cost will be on lower side. So connectivity can also be the challenge. So, but definitely, if you are going to invest in backward area, then the amount of incentive will always be on higher side in any policy. These are the fundamental rules. Another one is sector. There are some sectors in every policy. It may be called as thrust sector or focus sector, on which government is specifically focusing. The amount of incentive in comparison to large, mega, ultra mega, in thrust sector, it will be always on higher side. It can be in terms of number of years again, or the percentage of the incentive will always be more than the normal category sector or other than thrust sector. So I think the limit investment size TRSR has already discussed. Now the limit of the MSME has already been revised. In case of micro, the investment in plant machinery should not be more than 2.5 CR and turnover should not be more than 10 CR. In small category, the investment in plant machinery or equipment should not be exceeding 25 CR and turnover should not exceed 100 CR. In medium enterprises, it should be up to 125 CR in investment in plant machinery or equipment and turnover should not exceed 500 CR. If you will see the definition of medium enterprises, now the most of the companies in India will be covered under the medium categories, from MSME to medium categories. But this definition can be different in some of the state policies. For example, in Gujarat, to be classified as micro enterprises, if your investment is below 1 CR in plant and machinery, so you will be classified as micro enterprises. For small enterprises, it should not exceed INR 10 CR. And in case of medium enterprises, if your investment in plant machinery is up to INR 50 CR, so then you will be classified as medium enterprises. So while deciding the amount of incentive and the schemes for which you are eligible, so you will always have to look for, so you will always first you will always please check the category in which you are falling, because in every policy for micro enterprises there will be some additional benefit, because government want to support the micro enterprises, small enterprises and medium enterprises. The focus is on the MSME sector. So in comparison to other sector, the benefit for the MSME category will always be on higher side. So in case of large enterprises, like if you will check, in case of large enterprises in Haryana, the definition of large enterprises is investment in plant machinery INR 125 CR. If you are exceeding 125 CR and turnover is exceeding 500 CR, then you will be classified as large enterprises. In case of Gujarat, investment in plant machinery INR 50 CR. In case of Gujarat, eligible fixed capital investment between 50 CR and less than 300 CR, or you are creating employment of more than 100% and with minimum fixed eligible fixed capital investment is 50 CR. So what is the relevance of this eligible fixed capital investment or amount of investment? Firstly, in every state policy, there will be some terminologies used by the policy maker. First can be fixed capital investment or gross fixed capital investment. So gross fixed capital investment or fixed capital investment or investment, first thing is we have to check the gross fixed capital investment or the total investment in order to classify it under MSME category, large category, mega category and ultra mega category, because based on the size of the investment we can have MOU with the government or we can negotiate with the government if we are adding this amount, because that amount will be calculated on the present value factor of the benefits to be received by the government. In case of Uttar Pradesh, if we'll discuss investment above 50 CR but below 200 CR, it will be considered as the large enterprises. So every time we decide like to check whether we are falling under this category or for which schemes we are eligible, so we'll have to consider first point is the size of the investment or the category in which we are falling and the areas where we are going to invest, and third one is the sector, whether we are falling under the focused sector or not. In most of the states there are some sector specific policies also. You can check the website of, for example, for Haryana, Invest Haryana, Invest Uttar Pradesh, Vibrant Gujarat, and Invest Rajasthan, and Invest India also. So there are multiple websites in which you can check, or there are some helpline numbers also. You can confirm whether we are falling under this category or not, or what are the criteria to be checked, which assets are to be included in or not, because in some of the state land will not be considered as part of the fixed capital investment or eligible fixed capital investment. So the terminology can be different but the basis will be same. So this total investment is also eligible for the maximum limit of the incentive, because in most of the policies, most of the state policies, the upper limit is mentioned as a percentage of fixed capital investment or investment in plant machinery or equipment. So while suggesting or while finalizing or taking any financial decision, so we should thoroughly check these three factors. The first factor, investment size or size of the investment. Second factor, location of the project. And third project, whether we are third point, whether we are falling into the thrust sector or focused sector or not, or is there any specific product or service or any other specific policy in which we are getting covered or not. So the third factor is location. The block is decided based on various categories. Like for example, if you will take example of Haryana, the Gurgaon is considered as the developed area. So here we will be eligible for almost negligible incentive. So what will be the criteria to decide what are the locations, which are the locations which will be considered as developed, intermediate development, and then backward area? So there are some factors, the basis on which the government decide this in this category in this area we are going to give maximum benefit, or the benefit will be on lower side. So level of industrialization can be one of the factor. Socio-economic development, locational advantage. For example, if there is metro connectivity, there is some road connectivity, then infrastructure, ICD, port, airport, and then skill development. The number of universities and ITIs, IITs, IIMs. So these are the factors on which the government will always decide to classify the areas under the 3 or 4 categories. For example, in Haryana, there are 4 blocks. Out of 140 blocks, the blocks are categorized into 4 categories. A is considered as developed area, B is considered as intermediate development, C is considered as backward, and D is the most industrially backward area. So if you will see the policy, the maximum benefit will always be in the D category. So the amount of stamp duty refund, the GST refund, electricity duty exemption, employment generation, the number of years or percentage. And in order to have a memorandum of understanding with the government, the limit of the total investment will always be lower in case of backward area. For example, in Haryana, it is 75 CR to have a memorandum of understanding with the government. In Gujarat is classified into talukas and categories, like 3 categories or talukas. Category 1 is backward area, category 2 is intermediate development, and category 3 is developed area. In Rajasthan, it has been divided into zones 1, 2, 3, developed area, intermediate, and then backward area. Uttar Pradesh is also divided into 3 categories, region wise. Like first one is Gautam Budh Nagar and Ghaziabad district. These are considered as highly developed area. The amount, percentage, and number of years of the incentive will always be less. Madhyanchal and Paschimachal will be considered as intermediate development area, and Purvanchal and Bundelkhand as a backward area. So these categories, blocks, zones, talukas we have taken for example. In every state policy you will find most of the developed city will be into A category, or like category 1, where the amount of incentive will always be on lower side. Then focused sector, for example, we have taken some example of the focus sector. In Haryana, auto component and light engineering is the focus area. Textile and apparel, defense and aerospace manufacturing, pharmaceutical and medical devices, large scale energy and data storage. These are just examples. For complete list of the focused sector, please refer the policy of the respective state. In case of Gujarat, agro and food processing, ceramics, chemical, petrochemical, gems and jewelry, because Gujarat is known for textile and these gems and jewelry. Ports and maritime. In Rajasthan, it is agriculture and food processing, auto component, tourism, ESDM, electronic system design and manufacturing. In case of UP, you can also check Invest UP website for the detailed policies and the name of the focused sector or thrust sector. In case of UP, for example, agro, food processing, handloom, textile, tourism, electronics, manufacturing, defense and aerospace. So in every policy, there will be some focus sector. In these sector, you can compare the incentive given for the other than focus sector. So then the benefit will always be on higher side for thrust sector or for focused sector. Just for comparison, so we have taken the 4 state comparison, like what are the incentive or what type of incentive government is providing to the business owner. Like if you are going to invest into Haryana, so there is a no capital subsidy. But in case of Gujarat, this is for MSME specifically. In case of Gujarat, the capital subsidy will be 10 to 25%, but maximum amount will be 35 lakh. In case of Rajasthan, it will be 50 to 50%, but up to 1.5 CR. And in case of Uttar Pradesh, it will be 10 to 25%. It will range from the developed to intermediate areas. So 10% to 25%, 4 crore per unit is the maximum amount. For stamp duty refund, so stamp duty refund in Haryana, it is 60% to 100%. In Gujarat, there is no stamp duty refund. In case of Rajasthan, 100% refund is there for stamp duty, irrespective of any location. The one of the plus point for Rajasthan is they are the out of 100% stamp duty, 75% amount is exempt, and 25% will be reimbursed. So there will be the working capital requirement or the amount of investment will be reduced by this 75% amount for land. In case of Uttar Pradesh, it will range from 50% to 100%. In Gautam Budh Nagar and Ghaziabad, it will be 50%, and in backward area, it will be 100%. If you will see, if a state government is providing capital subsidy, so the same government will not provide net SGST subsidy. Gujarat is the only state in our example, so they are also providing capital investment subsidy plus net SGST subsidy. For net SGST subsidy, in Haryana, it will range from 25% to 50%, from 8 years to 13 years. So this gap of percentage like 25% to 50% and 8 to 13 years is based on the category. In A category in Haryana, the benefits are almost negligible. This 60% will be in B category and 100% will be in D category. For net SGST, 25% is the lower amount and 50% is the highest amount. Net SGST stands for the amount of GST paid in cash after utilization of ITC in the SGST and IGST as well. In Gujarat, the net SGST will be reimbursed from 80% to 100% for 10 years. In Rajasthan and Uttar Pradesh, there is no SGST subsidy. Interest subsidy is also one of the most important factor which plays a important roles. Like in Haryana, there is a 5 to 6% interest subsidy between 3 to 5 years. But in case of Gujarat, it is 5, 6, 7% in the respectively, like for 5 years, 6 years, 7 years, and 25 lakhs to 35 lakhs. In case of Rajasthan, if you will consider Rajasthan, so one of the plus point in Rajasthan is there is a huge interest subsidy, like up to first 5 CR, it is 8%. Like if you are incurring an interest of taking a loan of 5 CR, then you can claim 8% as the subsidy. That means 40 lakhs. On next 5 CR, the amount of incentive will be 5%. For next 40 CR loan, the amount will be 3.5%. In case of Uttar Pradesh, it will be 50 to 60% for 5 years. 25 lakh will be the maximal limit for the micro units. In case of employment subsidy, the pattern of all the states are almost similar other than Haryana. In Haryana, there is a standard subsidy, standard support by the government, like 48,000 per annum per employee who is on your direct payroll. For example, if at your plant there are 300 employees, then 4,000 per month into number of month multiply by number of employees. So that will be a per annum amount. This amount will be given for 10 years. In Gujarat, Rajasthan and Uttar Pradesh, the government is giving reimbursement of the employer contribution part. In Gujarat, it is 100% of employer's contribution part. In Rajasthan, it is 50% of EPF and ESI both. But in case of Gujarat, it is only EPF. In case of Uttar Pradesh, it is 100% for the employer contribution part of EPF for 5 years. In electricity duty bill, if you will check, there will always be a electricity duty that will be levied by the respective state government. in Haryana, the electricity duty exemption is 100% from 7 years to 12 years. In Gujarat, it is 100%. And in case of Rajasthan, it is 100% for 7 years. So just to brief again, so we considered three factors, like the form of incentive is in two types: fiscal incentive and non-fiscal incentive. Fiscal incentive we consider the financial support directly given by the government. For example, GST refund, capital subsidy we have just discussed. Then again, stamp duty refund, electricity duty exemption, employment generation, and freight assistance can also be there. For example, in case of Haryana, if you are exporting from Haryana, so 1% of FOB value will be given as a freight assistance subject to the maximum limit and the location of the unit from where we are exporting. In case of non-fiscal incentive, every state government is trying to train their people through their universities, skill development programs, and every state government is competing for faster approval under, or we can say, a single window clearance. And they are going to set up the industrial park, SEZ, clusters, infrastructure support. So while we are deciding for the investment, so we always consider various factors. So this state incentive is only one of the factor. So while considering this factor, so we always try to go through the policies, connectivity to the port, airport, the incentive given by the government, or any other non-fiscal support. Then if your end customer is, for example, in Delhi NCR, so we can invest in C or D category areas. In C or D category areas, the incentive by the government will be on higher side, and land cost will always be on lower side. But the one critical factor that needs to be kept in mind is the availability of skilled resource and infrastructure. So if you will consider, if you'll check Haryana state policy, so we have taken two slides, like overview of Haryana state policy. So we have already discussed there are four categories: A, B, C, D. A category is highly developed area, B is the developed area, then C is the backward area, and D is the most backward area. As we already discussed, the incentive will always be higher side on C and D category blocks. That will be considered as backward areas and most backward areas. In Haryana, we have net SGST, interest subsidy for women, SC, ST will be 1% higher than the normal interest subsidy. Employment generation subsidy 48,000 per annum for 10 years. But one factor we will have to keep in mind, the employee should be on the direct employment of the company, like on the payroll of the company, and from the state only, like Haryana domiciled employee or Rajasthan domiciled employee. So the incentive will be given to those employee only. Those employees will be eligible for the employment generation subsidy. Then again, stamp duty refund. So we can claim from 60%, 70% to 100% based on the blocks or location. 100% electricity duty exemption, and then EDC charges exemption, external development charges exemption. For thrust sector, if you will see, the incentive are on higher side. So fixed capital investment, I have already mentioned, in every state policy, the terminology can be different. It can be eligible fixed capital investment, gross fixed capital investment, fixed capital investment. So that will be used for the amount of total incentive to be given to the business owner. So I think we can conclude here. The purpose of this session was to give a brief introduction of the state incentive, so that while taking any decisions, we have I think persons from the multiple industries, various sectors. So while taking decision with for the new investment, like with import export benefit, so while considering cash factor, so we can also consider the state incentives and how the government is proactive in the policies implementations, law and order, we can say in simple terms. So that's all from my side. If anyone have questions, so I think Srinivasan sir, we can take question answer now. Thank you everyone for your precious time, and now I think we can take question answer.
Yeah, I think already sir has answered few questions. One question from Sandeep Yadav is like, section 74 and section 75. Please give a live example of filing duty drawback.
Yeah, section 74 is for the trading components. It is 74, that is you buy, import, and then sell as such. You manufactured in India and sold, it is 75. 74, I mean, both requires, documentations to be prepared. As I told, the key document is the BOM, bill of materials. Probably we will share the workings of how it to be done in a separate link, because the process explanation itself may take about half an hour, 40 minutes to 1 hour. So we will share that, and we'll have a separate link shared for the same, Saurabh.
Okay. Okay, sir.
Saurabh, Sriram here.
Yeah.
Hey, hi, Srinivasan, Ramanujam Sharma. I think nice session. So my question is that like you are saying that for advanced license, even the domestic purchases can be used. So one doubt is that how does the typical reconciliation happen? Like example, one of the use case what I can think of is like, do we have to tell the domestic buyer that whatever they are importing, they have to sort of sell it 100% to us, or there will be some percentage what the domestic importer can also use it for his own consumption? So is there a requirement to classify the percentage of import what is doing for us, or that is not a mandatory thing?
Yeah, see, the process works like that. So we have a FG. For the FG, based on the BOM, we prepare the advanced license and we get it. Could be CON based or no norms based. This advanced license is endorsed in favor of our local supplier. Against this advanced license, that advanced license becomes his FG. So for his FG, he'll have to procure, let's say, raw material. So that raw material he could buy in bulk, and some of that could be used for our advanced license, some of them may not be. So he has two options. One is he also can get an advanced license and import those goods to the extent of our advanced license without duty. So he has option one. He also get a back-to-back advanced license and import to that quantity without duty. So partly it will be under advanced license, partly will be on payment of duty. That is option one. Other option is, and he will supply against your advanced license. In his invoice, he will mention against his advanced license number so and so, and you are going to give an acknowledgement that yes, this is received against his advanced license. So his process is over. The other option is that he can go for payment of drawback, and then he can go for a refund of drawback of the special payment of duty, and then to that supply of quantity based on his BOM, he can go for drawback from the DGFT authority. There's no need for him to separately identify, separately mention these calculations in his stock register. It has to be proved by when, let's say, going for advanced license, it is anyway back-to-back tracked. If it is for local, not against advanced license, then based on the BOM, he has to get a CACE certificate and get a drawback.
Thank you. One final question is that, like, see, sometimes there is a difference in understanding of the HSN code, what we as importers need to have and what the exporter from the outside country needs to do. So, typically, like for established companies having a sort of a global corporate function, that they sort of bounce it off to them and then they get it clear. But in case of a small industry, so what should be the sort of risk-free approach that they need to follow in case there's going to be a conflict or difference in understanding of the right HSN code to follow? Like, should they go by the importing countries' HSN code guidance, or how have you seen such problems?
We have seen instances where the underlying foreign suppliers HSN codes could be different from what India has. Okay, if you take the example of, let's say, technology products, ITES products, there are a lot of products which India has now kind of withdrawing the benefit of the IT agreements. India has signed a first time ITA 1. India has signed with other countries. So they were giving exemptions for desktop servers, etc. Now they have not been signatory for the second agreement, etc. So there's always a conflict between what the foreign supplier claims versus what India wants to give exemption for. I typically example would be between chapter 8471 and 8570. It's one of the example which we keep coming across. So the foreign suppliers invoice per se doesn't become the basis. It's a responsibility of the Indian importer to independently assess the HSN code. So there is to make it risk free. As I told, the risk is there or not is purely a perception based on the officer. So if you are going to have a higher duty, then there is no risk. So long we are going to claim a lesser duty or lesser or an exemption, then naturally, it's better that we do an independent assessment of HSN codes and arrive it. Foreign suppliers invoice per se doesn't hold any, I would say, though it's a persuasive value, it cannot be treated as a only evidence for deciding the HSN codes. We have seen this for very established products also, and we have seen this now for most of the technology products. So foreign supplier per se cannot be treated as a base, even if they have a global tariff center which drives the whole process. At 8-digit level, sometimes probably at 8 digits level it could change, and SEPA benefits and other benefits changes.
Yeah,
so
correct.
it is imperative that it has been customized to India, especially at the 8-digit level, and we cannot leave it purely based on the foreign supplier.
Fine. So maybe if I can understand it, like if the entire 8 digit of the HSN is being agreed between the importer and the exporter, then that sort of clarity should be there. Because typically I have seen instances where the HSN code is called out only to the extent of first 4 digits. So the last 4 digits are sort of led to the interpretation of the importer. So is there a requirement that all the 8 digits have to be declared in all the importing documents, or that's a sort of a best practice to
Not required. That is, there is no export regulation or Indian regulation which mandates what should be declared in the exporter's documents. So it is purely our declaration in our importing bill of entry is relevant. So it can be at 4-digit could be same and 8-digit could be different.
Okay. Thanks, Srinivasan. Thank you.
So I think we can wrap up. We are 15 minutes over time. So it was a great session by T.R. Srinivasan sir and Ramanujan sir. So anyways, Ramanujan will share the PPT, correct? PPT and the recording with the participants.
Yeah.
So
Yeah, sure.
Thank you all. Yeah.
Thank you. Thank you.
thank you.